What's going on, family? There's no need to have the little intro if you already saw me. So let's just get right into it. I'm going to say what's up in the chat. What's going on? Welcome in, everybody. Welcome in. Welcome in. What's going on? Tell me where you are tuning in from. Beautiful. Beautiful, beautiful, beautiful. All righty. Let's go. Here. All right, we're still good. And I'm going to see if I can put that. Will allow me to paste it. Okay, perfect. Perfect. All right, what's going on, everybody? Hopefully you're doing absolutely wonderful. Welcome into our Stock Sermon Sunday. This happens every single Sunday until otherwise noted. And the support here on the channel has been absolutely beautiful. So thank you all so much for the kind words, especially from the educational content where I don't know what it is. I guess you like my teaching style. And if you don't, let me know that too, how I can improve. This is a holistic community of, as you can see, we have now renamed the channel since it was so trading and investment focused, financial specific. We went ahead and changed the name to this because I do have other ventures, other businesses, such as myself as a life coach and a business consultant for entrepreneurs. So that is a primary entity of what I do. You can check out my website, brianmceldery.com. My first and last name, my Instagram, and all my info will be out. It will be out in the chat afterwards, or maybe if you're already following different platforms. All right. Good night. Tell us what war is good for. Yeah. Crazy. What's going on? So let's get right into it. I consider y'all family, so let's just talk like we're a family sitting at a cookout on a Sunday. You're watching your favorite sports channel, whatever, and this is what this is, right? I want to make it casual. I want to make it fun. This is very beginner friendly. For people that may want to refer their friends or, hey, come listen to this dude, kind of hear the holistic nature of what's going on, because I do watch other channels, and that's fine. And what I see a lot of times is either there's no face, which is fine, or there is lack of authentic connection with the community based on what is happening, right? Instead of just showing the technicals or showing the charts, which is where the money's made. But I think a lot of people don't immediately understand the charts, and they want to know why this is happening. What's the result? Is this going to affect my savings? Should I go into cash? Should I be worried about my, portfolio? As you can see, Bitcoin has pulled back now underneath the 100K. I think at the time that I'm talking right now, I think it hit like 98,000, which is pulling back to a decent support. It was profit taking, right? We knew it was going to come, and now is the time, all right? So let me give you a rundown of how we're going to go about this, especially for those that are new to my channel and want to understand where you can skip ahead, where you can go forward. So I typically go over fundamental analysis or fundamental news, which is going to be what's going on with the war. Like, how is this going to affect if we go deeper into this? Should we be concerned? So on and so forth. We also have earnings season that's approaching in the next month, right? So we have our tech earnings that have kind of been in limbo. They've been strong, but they've been kind of weak at the same time. We've got Apple, it's been weak. We got Google. There was a pretty decent, in my opinion, sell-off or a correction on Friday, okay? So that was a little bit of a telltale of maybe what was to come this weekend. And I'm not going into insider trading or news, but we know that some folks know more than others. Isn't it ironic that there was some heavy profit taking on Friday, and then the war or the bombing or whatever was planned happened over the weekend, and people can't do anything about it? Get my drift? So it's interesting what's going on. So we'll go over that, and then we'll jump onto the charts where I'll go over various different stocks, our major indexes, SPY, QQQ, IWM, and then if I have any futures questions, you're more than welcome to ask in the futures market, which right now I'm really loving gold in the futures market. But also, I do believe ES and NQ are, in my opinion, a little bit less volatile during the after hours or maybe London session, Asian session, and New York session is just a wild bull. Okay, so please be careful if you're in the futures market. If you're seasoned, awesome, good, you're good to go. Maybe you just need some levels. I do check the chat, so put down in the chat and say, hey, what's up? Dr. B, what's going on? I would love to have y'all inside of Leverage University. Some of y'all that have been lingering and mooching on here for long enough, and you have questions, extensive versus just once a week, and you want to upgrade and you want to get into where the actual strategies, the signal, so to speak, the ideas, the lessons, the university section where I do trade reviews, all those kind of things are inside of our university. There's a 3-day free trial that's right there in the comments if you want to go ahead and join. You've, as folks say, you've been coming long enough. You got to commit. All right, that's enough of me. Let's get into it. Here's our Discord, as you can see, very organized here, in my opinion. I know it's maybe overwhelming for some, but I always keep mine very closed, as you can see. So I always, even if I'm in others, I don't have a lot of tabs open. I always close all of them to these sections, as you can see there. The sections have a little arrow to the right. You can click into that arrow and it goes down, and that's where the chats actually open up that are underneath the section. If you want to know about crypto, click on that. And it goes into our Bitcoin levels, altcoin levels, so on and so forth. We do have club rooms, which is where we kind of, chop it up, so to speak. If we want to talk travel, personal finance, appreciate you, Ben, for always posting in there. Sports talk, right? This is kind of general stock talk. If someone wants to just join the community, words of wisdom, and then other things that are in there that we just like to chat about. Our university section is where we have all of our trainings. So people ask me a lot of times, where do I learn? How can I see maybe a trade that you took, but I didn't take it, but I'm trying to see it play out, kind of like live trading reviews, right? I review the full trade that I may have thought was a good learning lesson, right? And questions that you have, right? So that is open season for anybody that's inside of Leverage University. They can just ask me and say, hey, Brian, can you make a training over that? I make a quick training. They watch it, and it makes everybody's life a little bit easier. All right, so there's that. Let's get into the good stuff here. Let's go into fundamentals. We got economic data, and I've been pretty speedy with this. So if you're a newbie, if you are still have questions, please understand that there's been somebody there before you, okay? There's been somebody there that's has questions, but you were involved, right? So if you do have questions and you feel a little bit shy about asking a beginner question down below, you're more than welcome to ask in the chat. I'll answer that towards the end. I do not want to lose anybody on, man, this isn't making any sense. I don't get how they make money, so on and so forth. Get my drift? So I am speeding these Sunday analyses up to earn people's trust. I was going a little bit longer, but now it needs to be no longer than an hour. If you want to learn more, jump in the community. All right. This week's major economic reports, we got PMI tomorrow at 9:45. If you know, you know, anytime there's 10 a.m. data, existing home sales, there's going to be volatility. So about 30 minutes in the market. Ideally, if there's a trade setup that we can take before that data hits, that's great. But rule of thumb, gold standard, always wait until after that 10 a.m. data to report, and then we can choose a direction and take a more solid trade, okay? Now, the key thing tomorrow that's going to be everyone's wondering, which I'll get to, is how is the market going to open up tomorrow? How is the futures market going to look? Because this is what everyone was fearful of, right? Getting involved in this war, actually sending bombs. Now, a caveat to that, if you didn't know, is there were plenty of warnings, right? There were plenty of warnings from President Trump saying, hey, we tried to do a deal. They weren't willing to cooperate. They had threats on our bases. We can't do that. We can't back down. I'm sorry, United States, I had to do it, right? That's the sentiment now. So it's not a, gosh, we got pulled into this thing. Like there was, as much as people don't want to give grace, like you got to give a little grace to say there was preemptive warnings to say, hey, we're trying to not take it to that stance, right? But it is there, okay? So that's going to be kind of a wrench in how the market reacts. Are we going to have more selling pressure tomorrow? Are we going to finally break this range on the charts that I'll pull up in a second? We don't know until things hit. And we got PMI plus this bombing and war and retaliation. No one knows just yet. So I'm kind of keeping my head on a swivel to say that any pops that we have, because we've had multiple days last week where I was reading the whole week and we were popping and fading. Popping, fading, popping, fading. And all that means is we were having lower highs, lower lows, lower highs, lower lows, which is a signal for a slow downtrend or a slow bleed. Okay? So we're sitting right at a pivotal point. And I told you last week, watch 595 on SPY. Okay. So there's what's going on the docket. What else do we got? We got some 10 a.m. data on Wednesday. That'll be interesting. Jobless claims, always good. GDP, second revision, any 8:30 data I'm always paying attention to. Pending home sales, that will be a little bit volatility there. And then consumer sentiment, that's always a big data report at 10 a.m. And then we got PCE, personal consumption expenditure, at 8:30. So I believe it's going to be a good trading week personally because we have our OPEX out of the way. Last week on Friday, options expiration, it was a little wonky week because Thursday was Juneteenth, so there was no trading. So it was a little bit of odd week. This week, I'm looking at it to say, okay, Fed Powell also testifies here. So there's plenty of opportunities, in my opinion, every day looking at this type of week to say, there should be some nice movement, one direction or the other. Some nice continuation moves, which I've been waiting on. I'm like, that's why you haven't been seeing many trade updates or like midweek updates or new videos, because like nothing's happening. It's the same levels. Okay. So there's that. Let's jump into, let me get off that because sometimes that runs a little slow. Twitter. Let's go into our earnings. All right. So let's pull this up, starting entering into a little bit of earnings that we're familiar with. We got FedEx, also a nice mover. We can trade that either Wednesday morning. I will look at it for my community. I know y'all are a lot of times asking for lottos and anything that might move crazy. FedEx can move crazy, but it's kind of spready. I don't know if I want to mess with a lotto. Just there's too many good trading opportunities, in my opinion, if we break ranges. Micron MU is going to be really key because that is a semiconductor, and the semiconductors, obviously NVIDIA, AMD, have been moving, right, and trying to break new highs, trying to move up. And Micron, even though it's not a massive name per se, it does have a lot of sentiment towards this sector. So if Micron Technology, MU, makes a nice, productive move, if they mention anything about, coordination with NVIDIA or AMD, so to speak, or their chips that are involved and whatnot, then we could see some movement in the semiconductor sector. So pay attention this week on Thursday morning, more specifically, for some of the semiconductors because Micron will be a good post-earnings trading opportunity. Nike, that's going to be interesting to watch because Nike's been beat down, but I have been seeing, and I'll jump on the charts in a second, I have been seeing Nike kind of consolidating and getting bought up a little bit more. There's been some failures to go lower on Nike. So I'm wondering if it's kind of setting up for that surprise announcement. Like it could, now if they come in horrible and say, kind of like what Lululemon did, hey, we just don't know where these tariffs, we don't know, they're not fully implemented yet. There's not a lot of innovation going on, even though they got a new CEO. It's tough right now for them, in my opinion, because nothing's very new and exciting, right? But it's Nike. So it's been around for a while, right? And it's been a stable investment tool for a lot of, I would say more so the baby boomers and Gen X's, even some millennials have had Nike for a while, and people are wondering what they're going to do, right? So I think that one's going to be interesting to just watch, and we'll look at it on the charts. All right, so there's our earnings calendar. Nothing major there, but we're starting to see some familiar names. All right, let's go into SPY QQQ. And put a 1 in the chat. I got to get y'all's attention. Put a 1 in the chat if you are ready. Put a 1 in the chat if you're ready. All good, all good, all good, all good. Everybody good? Take a sip of this protein shake. We're good? Cool. Cool. All righty. Let's jump into SPY. All right. So we got some action here on SPY, and I'm going to always start from a blank slate here so y'all can see it done live and you can follow along maybe on your charts. Okay. A couple of things here. SPY is the ETF of the S&P 500, signaling that it is just a cheaper version. Okay. The S&P 500 is SPX, and then we have the futures market, which is ES. Okay, so I will look at some of those levels to see if they correlate, but more specifically, just kind of want to focus on SPY because I think it's more beginner friendly and it just makes a lot more sense for some people. All right, so I'm working right to left. On the chart, you'll see a couple of different things. You'll see my, let me go here, bring it up because it was kind of dragging a little bit. All right, I'm on the weekly time frame. Okay, now this blue line that you see here is my 20-day moving average, and based on the interval that I'm on, right, each candlestick represents that interval. Okay, so I'm on a weekly time scale. That simply means that I get a bigger, broader view of what's actually going on versus these fast little candles on a 2-minute time frame where people might show. Okay, you always want to start from higher time frames. I personally like to start from the weekly. Sometimes I'll check out the monthly if it's approaching the end of the month, which we technically are. So I will start checking that out. But as far as the weekly, we're starting to see some things here. We've got we've got two red barred candles here on a weekly, signaling struggling to continue up even more. Now, why can't we get too excited that this isn't going to just tank just yet? Is because we're still above, technically, this kind of weekly bullish candle here close, which is roughly around 593, okay? Roughly about 593. So we have this weird area from 593 to 595 where there's still a previous weekly candle close that could serve as support, which is kind of showing you a little bit now. So this could serve as a little support. We could bounce and we could go higher, right? So let me turn that there just so you can correlate it to support, right? So we could hold this level here and then try to trend back up to the highs, okay? So the weekly time frame is showing me more so just exhaustion. That's how I'm looking at this. It's not giving that continuous big next, like if we were really, really bullish and we were confident that, hey, this war doesn't mean anything, blah, 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 technically this candle last week would have finished above the previous candle high, which is closing, just say above 600. The candle would have looked more like that. So that's how I'm reading this, and not to get too in depth, but this is how you come up with the ideas of maybe what you want to, which direction you want to be trading, right? Even though we're still in a bullish market, right? Technically, we're still making higher highs, higher lows, higher highs, higher lows, but you'll see it change once I switch to some of the hourly time frames, okay? So let's mark this off from the high, and I will go from the previous weekly highs. I want to just mark it there. Okay, you can see that's roughly at 604 and some change. I'm just going to mark it, 603.25. I want to be more specific. So I want to keep it right there at just say 603. Okay, so we had 2 weeks to try to close a candle above 603, which we could not do. And if you look left, what happened at 603, 605, it just got a little bit heavy, right? And that's what you're seeing in this zone right here, where, there's traps, right? Because it's very tough, in my opinion, to trade at all-time highs. Even though people are yelling and screaming from the mountaintops that their long-term portfolio is doing well, everything's good, you're getting your dividend payments, all that kind of stuff, right? I'm happy about that too. But when we're talking about like being a little bit more cautious, right? Do I buy up here? Do I trim a little bit? Do I move some out into a cash position, into a 4, 5, 6% interest rate product? I don't know, right? Because the risk to reward until we break above that 605 is starting to, get a little bit heavy, okay? And what I mean by heavy is that you're risking, here's how your risk to reward would look if you go long, and those that know, long simply means buys or call options. Either way you want to take it, you're looking at the thing to go up, right? There's people that are kind of, I'm not saying blind, but they don't have a head on a swivel, as I like to say. You see on social, man, this is going up. Don't forget this war, it's going up. But like, by when? That's what I'm saying. I'm not opposed to it bouncing and going up from here, but don't get it twisted that this is what the risk to reward looks like right now. Do you see that? So if I start buying up here, right? I have all this risk that this could pull back even further. And you bought up here, whether that's shares, equity, call options, whatever, right? So you've got to be mindful in these pivotal areas where you see heavy resistance, and then you want to say, well, where is the best risk to reward, right? If I think it's going up, because that's what most people think, the market only goes up. Well, you could look at it somewhat of like a risk to reward here, where there is some support right around this kind of 589, okay? So I'll mark that area, 589, 590. There is some support there. So you can look at that risk to reward right there. And it would look something like this, maybe targeting back to the highs, something like that, and see a pullback, see it holding, see it bouncing, and then we see some type of reversal, right? So that is an opportunity, is that there's another trap down here because we are so bullish with these two, continuous candlesticks here. This could just be simply, just like this candlestick, pull back, another high, pull back, another high, right? We don't know what's up their sleeve, right? So this week, I'm going to be watching 595 to see how we react there, kind of 595, 593. Are we rejecting? Are we reclaiming it? We're going back up. So on SPY, your level is 595 is the pivot point. Okay, we always mark our pivot points, at least for me, if you're learning from myself here. I like to mark my pivot points where I'm looking for directional change with a yellow dotted line. Then I'll mark my kind of bigger macro supports, right, where buyers are sitting with this green area. And then I'll mark my macro just meaning a large area where I have a lot of information, right? Large area, big movement, right? And then I've got some buyers sitting kind of right here. See it tick down, came back up, buyers. There's one right there, buyers, right there, big candlestick wick, buyers. And then we broke above, held right there. So there are some buyers sitting at roughly 589, 590. Okay. So let's go down into the hourly time frame here and look at this, how this candle structure is looking, what I'm talking about. Okay. So two things. You see, before I even marked, and I'm sorry. There's a text coming through. Just got to make sure everything's good. All right, that's what a live is for, just to make it real. Okay, so do you see this downtrend here? Lower highs, that's what I was mentioning earlier, right? I was saying, okay, lower lows, lower lows, lower lows, lower high, lower high, lower high. However, as you see, I drew this. What if this is just simply another bull flag? Flagpole, flag, breakout, right? That's what's been happening every single time, right? So I have not really, I've gotten accustomed to, because this Trump market is a little bit different than our last one, right? I traded during the last Trump market, 2017, 2018 timeframe into 2020. And this one's a little bit more volatile, a little bit more drastic in my opinion. And there's a lot of traps, right? So I'm looking at the overall trend and trying to see, okay, are we still bullish technically? We're also, if you notice here, sitting right on this daily 20. Put a 2 in the chat if you've heard me talk about the daily 20 moving average, either in Leverage University or whatnot. This is typically a pivotal point on the daily time frame, daily 20 moving average, that if it holds that, you do not want to short, right, with puts or thinking things are going to tank if it's sitting and holding above that daily 20, which is ironic before I even pulled it up, right where I marked that yellow line, okay? So this is telling me that this is simply a pullback to rotate, or at least try to rotate back up. We'll have to see. Now, if we break below it strongly and we continue and we turn that 593 into a resistance, then yeah, we can start targeting into these lows, and it would look something like that, okay? So we would go back to these areas here that we were previous were, that's 586, 583, 580, And personally, I think if we get below 589 pretty solidly, that's a confirmation that we're probably going to change trend, and it's going to start, slowly fading. Every pop, fade, all the way down back to 576. And we don't know when this gap is going to get filled. I don't think personally that's going to happen unless some drastic news happens and the market gets scared, right? But we're sitting around that pivotal point, okay? So I'm going heavily on SPY, as I always do. If you're new, rewatching this or whatnot, I go a little bit heavier, a little bit longer on SPY. I speed it up on QQQ, and then I go a little bit quickly on levels on respective stocks, primarily the Mag 7 and some others I'm looking at for the week. All right, let's go into the hourly time frame here. And you can see that 593, 595 sitting at that previous resistance there. And what I'm looking for is trying to see if this holds, okay? Do I see it holding tomorrow or into the pre-market, right? I do not want to necessarily short. I want to short on a lower high, and maybe that lower high presents itself somewhere around 598, right? 598 to 600, somewhere around there, right? I want to watch to see if this trend breaks or not, okay? Because if it starts to get strong for whatever reason and we start to rotate like this, y'all have seen it before, right? It breaks and there's a big bull flag. And you target 600, target 603. All right, so I'm just giving you that idea first because we're sitting in support. So all I'm saying tomorrow is I'm not going to be like blindsided to say, oh man, they're bombing, the war's going on, the market's going to tank and crash. We don't know yet because it's still sitting in support unless we wake up in the morning and the market's down, right? So there's SPY. Any questions on SPY? What questions do you have? Thoughts, perspectives? Everything good? All right, cool. Keep moving along. QQQ. Let's go into the weekly, take a look at that. Roughly around the same, as you can see, still sitting in the same kind of previous high spot here. Oops. Man, I was like, that looks almost identical. Why are the numbers the same? Okay, QQQ is still that level. If you've been watching me for a minute, levels haven't changed. What I say before is roughly around 523. As long as QQQ is above 523, right, we are still bullish. Okay? That doesn't mean we can't trade puts, but you have to watch that where the entry is going to be, because Friday was a great put session. Pop into 533, beautiful rejection. Didn't think it was going to continue because we haven't got any continuation for weeks. That was the frustrating part, is I was like, man, I fumbled a big bag on Friday. Made good money on Apple. I think it made like $300-400, something like that. I had three contracts of Apple puts, 0 DTEs. Each contract I purchased roughly around $70, and they went to $350 per contract. So you buy one contract for $70, it goes to $350. You do the difference. There's your $200, and you do the math if you had multiple contracts, right? So I don't need a lot of size if I take a solid trade, right? And that's why I try to teach my community, or at least I invite, is you don't need 20 contracts, 30 contracts, 50 contracts. If you can know how to trade and take the right trades, right, and know when to trim, you can get, $200, $300, $400 and turn it into, 50%, 60%, leave runners for 100%. Those are the trades that I personally take a lot of times. If Dreama's in here or any of my other Leverage University members, like our trades are typically 30% minimum. That's when I want to trim profits. I'll maybe trim if I see it getting stuck around 20 or 15, but I want 30%. Right? So I look for those setups to say, can I get a big move, and is it at my location that I want to enter? If it's not, I'm not entering. Okay? Or I'll know the type of trade it is and like, this is more of a scalp, quick trade. I may only get 15 out of this. Take it and leave it. Right? It's not that type of big movement day. So Friday, we got that big kind of, I wouldn't say it's engulfing candle, but a big rejection off of that 533, as you can see there. And this could just simply be another retest candle, right? Big bearish momentum there. Retest into another lower high. So it could pop all the way back up into 529 potentially. So that's what I want everyone to be prepared for. If we're in support, if we're close to 523 or 525, right, I would be mindful that that's support. But the trade that I would probably be looking for more specifically is a pop and a fade, right? Pop, right? If it's sitting in support, we can scalp some calls in the morning, but ideally the best trade, especially with 10 a.m. data, is see if we can get that push up higher, see where it settles, and see if we can get another rejection back down off of 530. And we can trade respective stocks on that too, because we do have some tech stocks that did take a hit on Friday. Google, Amazon taking a hit back underneath that 210, so to speak. So that's the trade idea of how I'm going to be thinking. Okay, let's see where the daily 20 is. Okay, as you can see, sitting right on top of it, right at that 525. Right, literally bounced off of it. So it is literally sitting in support. If we get underneath that 525, right, that may start a little bit more selling pressure, but we still got that 523 in sight. Okay, so where you want to leave, in my opinion, the quote unquote calls alone. If you're extremely bullish on this market and you're like, Brian, I don't trade against the market, I don't trade puts, I don't trade sells and futures, I just wait for pullbacks. If it's QQQ or the NASDAQ, more specifically QQQ, if we break underneath that 522, right, just say we get into the 521s, right, and it's a big bearish, candle that comes down, I'd be very mindful of trying to catch this falling knife if it does fall underneath sometime this week, potentially underneath 522, 523, and then we start pulling back down because there's nothing but room down back into 514, kind of the same levels of how we rejected here. Look at this exact movement here. Went all the way up to 526, pulled all the way back down to 511, right? So if you see big red and you're not comfortable trading against the market, just let it happen, okay? Don't say, oh man, this is the dip, and try to time it if you're not in a group or you don't necessarily read the charts well, whatever it is, price action, all those types of things. And again, remember, I know I've got new people here. There's a 3-day free trial link down below in the chat for Leverage University if you do want to get inside of our Discord where I do teach. If you like my teaching style, right, this is how it is even in live trading. As I'm teaching through the trades, I'm not just calling them out. I'm guiding my rationale, why I'm entering, where's the stop loss, how much I'm risking, all that kind of stuff. So it is beginner friendly as well. All right, IWM. Again, sitting at this daily 20, right, is technically in support, right, 208. Now, IWM is an interesting pullback because it is getting some selling pressure like the market. But if we look at IWM here from a bigger time frame on a daily, it looks good on a daily. If we look at this, is that an inverse head and shoulders and is sitting right at this neckline? Okay, neckline sitting right at 208, 209. So I'm kind of watching IWM a little bit to say, this may, and there's like a little small gap up here, if y'all can see that little 212 little gray area. But if IWM can hold this area, and I see it holding, reclaims 210, it could maybe get some movement back up into 213, 214, depending on how the overall market is reacting. All right. If it breaks kind of this downtrend here, all right, that would be back above, roughly about 210, 211. If it reclaims that, I'm going to mark that pivot point right there. And the reason I marked that, for those that don't know, how'd you get that? I'm looking at this candle close, all right there. I'm looking at that previous rejection right here, which is at 210.90. So I'm just going to mark it as like, just say 211. Because if we get back above there, that takes out that red candle close technically, and then it could, break back above and then go. All right. So IWM, I kind of like the setup personally. I think it just needs some momentum with the overall market. Hopefully the market doesn't get scared. So if I don't see a big reaction or some type of like consolidation and it's just failing to go lower, it's trying, I'm like, okay, this is holding. All right. So watch for IWM for maybe calls back up if it's still holding this 208, 207 area. All right, let's jump into our big wigs, our Mag 7. I'll jump into the strong ones first. So I'm going to separate them this time into like what's strong and maybe what has a little bit of weakness. That's how you trade, right? Excuse me. That is how you trade the stocks relative to the market. So if the market's weak and Google's been weak or Apple's been weak or Amazon's pulling back a little bit more aggressively, those are the stocks you want to trade with the weakness of the market, right? If you have some strength, or like Nvidia is still holding, above 143, 141, it's not really going anywhere. If Tesla's still holding, Meta's still holding strong, Microsoft's still holding strong, those are the stronger stocks. So you're not going to get as big of a move to the downside or whatnot if the market is pulling back. So just taking that into consideration. If you already knew that, that's great. So the strong stocks right now, I haven't talked about Microsoft and Meta that much because I don't really like the setups on there. Meta looks a bit better. Microsoft, I really want to short it personally, but it's just it's a beast. There's no rationale to it. It's just, I think it's overextended. Okay. Nvidia is in this weird space where bulls are just like, give us 150 now, please. Like, what are you doing, right? It's good to scalp, right? I think Nvidia is good because of the price of the contracts. You can get really good prices on contracts close to the money. They move in dollar increments. So I think Nvidia is a really good one to trade personally for even scalping, because you're not spending a lot of money. You can keep it closer into the money, even for end of the week contracts. And, if you like to give it another week, it's still not that bad, right? So Nvidia is doing what? Holding above the daily 20, right? If you learn nothing else, if it's a starter for you, if it's like, man, I just can't understand, are we weak, are we strong, right? Try that out. You don't need a lot of indicators on your charts. I literally have the 200 moving average and I have the daily 20, right? I have the 200 and I have the 20. Some people use the 100 and the 50. I personally, more so day trade, and I use the 200 for kind of those like bigger momentum swings. So if it gets back above the 200, you can see how, aggressive that trend change was, right? Bulls really pick back up when it's holding above the 200. The daily is kind of like that guide, right? You see how close it kind of rides that wave a little bit more versus, this is a little bit more stable. Okay, cool. We're strong. It's above the daily 200. So the daily 20 is kind of more of a day trading indicator for me. If it's above it or holding above it, right, I can trade into it, maybe some puts, but if it's above it or close to it, I do not want to trade puts or sells into that daily 20 because buyers are trying to hold that up. Okay, and that's sitting pretty much right at 140, 141. All right. So that is your support, and you can see there as we come into the hourly time frame, there is a little bit of a gap fill. Right? So I don't mind Nvidia personally if the market does get a little bit weak. If you can get continuation, you see it's still very choppy up in here, so it's not that big continuation that you would want. But if you can, or if you'd like to, if you see it underneath 145, 144, you can see how heavy it gets underneath that 144. Just say 145. I like 145. If we can see it continue to reject, you could get that continuation back down. So about a $4 to $5 move on Nvidia, right? You could look at that idea. If it continues to reject up here, it may want to rotate back down into this gap, 141 and some change. All right? And it may continue a little bit further down into there if the market gets weak. Okay? Our big line in the sand for Nvidia is more so 137. Okay? Some of y'all remember that for a while. You have it marked on the charts. You should have it memorized that 137 is that kind of breakaway level where we couldn't get above before, as you see right here, 136, 137, reject, and then finally got above, finally reclaimed, and then just kept holding above there, right? So even if it pulls back deeper into that 137, right, that's still, guess what, right at kind of a key pivotal point. This is on the hourly time frame for the hourly 200 moving average. So sitting right at that 137. Okay, we good on Nvidia. Right, let's keep moving. Strong names I said I was going to go through first. Nvidia, I'd say all the semiconductors. Let's go to Meta just to kind of look at the chart. Let's go on a daily on Meta here. Okay, pulling right back into the daily 20. So again, another setup that could be a bullish setup if it holds that, and this could simply just be a pullback. Right? So again, that's why I'm thinking when I was mentioning SPY, I'm like, I know we got this war, but and these bombs have gone off. I need to see what happens in the pre-market, because if we're sitting right here where we are right now in the pre-market, and the futures aren't really selling off, then we're holding, and there may be an uptick before it comes down lower, right? So Meta, you can see right there, the daily 20 sitting right at 675, okay, and then 680. The reason I haven't been trading Meta because the contracts, the volatility is too much risk for me personally. Like a weekly contract, for me to get in the money, I'm not looking to spend $600, $700, $800 for a weekly contract. So that's why I haven't been mentioning Meta. I know maybe a lot of other traders may mention, but I like putting, I like scaling into my trades, right? And I personally don't want to have to spend $800 for anywhere close into the money versus Nvidia. I can do a weekly contract right in the money for $200, right? So there's my rationale for why I don't mention that a lot. Did enjoy trading Meta personally. Like I traded it a lot in 2023. I traded a lot before then, and then it just went parabolic. So Microsoft, nothing really to see here. I think it's an ugly chart. There is some selling pressure here, but again, still sitting at that daily 20 at 467. But you see why I'm saying I want to short Microsoft so bad, because I know it's broken into new highs here, but it's giving kind of a weekly exhaustion, a little bit of a hanging man, shooting star type of candle here. Not really confirmed yet until it breaks trend or structure. But looking at this uptrend here, as you can see, still holding that uptrend. Even if it breaks that uptrend, that's still into the daily 20, and it could hold that and go higher, right? So I'll be watching this daily 20 on Microsoft, which is sitting right at 467. I'll be watching that to see what it does. And then that psych level of roughly 470. Okay, if it holds this trend, it's going to just keep grinding up, right? But if the market gets a little bit scarce and we start to see something like this, right, that's where I may get interested, because then I can wait for a retest, right? Obviously, that'll be a big enough dip that people will probably pick up for calls. That's fine. But that might give me a signal to say, maybe it's starting to form a little bit of exhaustion, and we start trending back downward, all right? If you see that. So if I see a big break or a weekly candle that looks like that, or everyone, man, the market's tanking, blah, 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 I want to kind of see what Microsoft has been doing, because I've been itching to short this, and I don't know. It's not a good idea right now. Ever since they had earnings, they haven't really left since about a month and a half ago, almost 2 months now. Haven't really left this uptrend. Let's see another strong one. Palantir, still strong, same kind of setup here. Just, I know it's a red candle. I know it's getting exhausted. I know it's not continuing higher, but every bounce has been getting picked up. So even if it has a bigger dip, all right, Palantir off of that 133 and then into, just say, that psych level of 130. So between 130 and 133, you can look at maybe a little bit higher time frames here where you may see some support sitting right at this 136 area. Right here, it could bounce there. But being at that it's all-time highs, I'd be, a little bit wanting more of a bigger pullback if I'm looking for calls. Okay. Palantir is another one that I think is a little bit overextended personally. So I'm looking for that kind of confirmation, which would really need to be back underneath this yellow line, back underneath those previous highs at 125 and some change, back underneath this yellow line. Then maybe we can get a deeper pullback, something like that. I do believe Palantir will pull back personally into sub 100. And if it doesn't, I don't really care. But that's really where I think it needs to pull back to give that still higher low structure. You see us bouncing here, and then it just grinds. Anytime something has big bullish momentum and then grinds up, typically there's going to be an exhaustion point, and that's when you kind of see a bigger pullback eventually. Kind of like here. I mean, this is a little bit more bullish momentum, but this was straight up, straight back down, and then it starts to finally start to have some form, right? So, there's Palantir. Nothing really to say. Same setup. Tesla is still holding strong here. Okay, this is kind of like a bullish consolidation, but it's not confirmed yet. As you can see, I've already drawn it out here. Tesla consolidating above this kind of 315 level, 315, 320. I know they have their robotaxi and all that kind of stuff. They have good news around them, but it needs to show its, it needs to show its true colors. What is it going to do here? I would say this more bullish consolidation, personally, something like that, right? But it could easily break the other way. So we want to just wait and see what Tesla does in this range. If it breaks above this 332 range, okay, it gets back above there, you can see what happens. If it's strong, breaks back above, we could start to see some bullish momentum from Tesla. So want to keep an eye on that. As you can see, it's stuck right in between the daily 20, which is below it, right? It's below the daily 20. So what did that tell us? It's short-term weakness. But it's above this kind of bigger indicator here, which is that daily 200. Okay, that daily 200, remember, it kind of guides on that bigger scale that we're back bullish, right? So anytime I see it in between, it's kind of trying to choose, does it break below all of them? Okay, we're coming back to the lows, and this is a bear flag. All right. So we'll see. AVGO, another great hold here. I actually like this on AVGO. AVGO, we absolutely slammed like to the T on this daily 20. We entered right around here, almost bottom ticked it when it was approaching the daily 20. I told my community that I was in AVGO calls right here in this area. And you can see what it's doing right now. Again, at that daily 20, it went below it, reclaimed. And I think this is a good lesson of how it looks when that daily 20 is showing up, right? How if it's above it or approaches it and we're bullish, it's going to try to hold it, and that could be kind of a support zone for you, right? And it's still got more gap to fill. So this chart reminds me a lot of CrowdStrike. I'll show you what that looks like in a second. But I do believe AVGO, especially with Micron, right, it could try to fill this gap back to the highs, right, if we do have some bullish strength, okay? I don't know if it's going to do it this week, but maybe trying to target another $10 move to the upside on AVGO if it can get moving, okay? Not really, it's having a tough time with these, I was watching on Friday, but it's still above that level and it's still formed a higher low right on this trend line right there. And it could easily bounce, right? So I actually like this setup. Keep an eye on AVGO for calls. The market kind of follows through. If we can get that break back above 250, 251, get that solid break, then we know there's a gap fill up above. We can target, we know it's going to 255, but can we target finally further into the gap, 259, 260? Okay, so keep that on your watch. I kind of like that it's sitting at the daily 20 and reacting positively off of it. Okay, so let's give a little bit more confirmation right there. Okay. Let's go into, I think I went over all the strong ones per se. All right, Hood, still very $80. What did we say our targets were? 80, 100, right? Entries were anywhere at 68 to $71, right? So if we can get any type of pullback, remember, I don't have to say it at this point. I think y'all have heard it enough. Broken record, daily 20, right there at that 71. So anywhere above it, still bullish. Any type of pullback, ideally, is what you would want to try to get it to go higher. So I know Dreama, you had a really nice trade on it as it broke previous highs above 77, entered some calls. So now just waiting on maybe a deeper pullback into that 72 or 71 range if possible. Okay. So keep an eye on Hood, very strong there. Uber, still consolidating. I'm going to get to Google, Apple, and Amazon, which I think are a little bit on the weaker side, but they're sitting in support. Okay, let's take a look here at Uber. Very interesting chart here. Really starting to like this personally because it has been consolidating, and I've talked about this for a minute. It is below the daily 20, as you can see, right? Lower lows, lower highs, lower lows, but it's in this kind of wedge after this big breakout move. You can see right here, big breakout, right? Consolidation, something like that. So that's kind of what I'm looking for, is that kind of curling action out of kind of $82 to $83. Okay. That's also at the previous highs right there, previous highs right there. So that is a macro resistance that's now turned to macro demand slash support. Okay. So I'm going to be watching Uber. Now it is, taking its sweet time to really make that big move. But I think if Uber can get back above 86, that's where the big momentum is going to step in, because that will be the level where the daily 20 is going to step in and get back above. So it'll be that pivot point right there. We'll be back above that $86. Okay. So I do like Uber. You might have to put some time on your contracts. Personally, I've got a price target of Uber of $100 personally. I think it can get there, and it's not too far away, and it would look something like that. Okay. At least we know it's going to retest the high at 93. So that's a $10 move from there. So calls, I'm not going to give specific contracts here as we're wrapping up here, trying to get it within the hour. Calls, I would give it at least a month or two. I would start looking at August 15th dates for any of these setups that may take a little bit longer. Okay, at the minimum. Okay, let's go into Google. Google, very interesting kind of break here, and I'm so salty because Google's been kind of like my best friend personally lately. Best friend. So that's what's been frustrating me personally, is Google got away from me I was a little bit conflicted because it was so strong, but I knew that it needed a pullback because it's just been a little bit weaker than the rest of the tech stocks. But Google's one of the sleepers that I think any pullback, especially deeper into these lower ends, maybe it fills this gap into the fall time. I truly think that Google is that one that, even if we pull back deeper, it's going to fill that gap back to 200. It is a $200 plus stock, and anything, in my opinion, underneath 170, between 170, whether you want to pick up some shares or long dated call options, I think Google personally is a sleeper. Okay, so Google's sitting in support. All right, I know it's below the daily 20 and the daily 200. They crossed, and that's where we got that big break. So I think this is another great example. If you can see there that most people were maybe potentially thinking that Google was still very strong, right? But this is where these kind of little helper guides, our indicators or the charts kind of tell us where that big break is going to happen. You can see that uptrend right there. Where was the uptrend? Sitting right on the daily 20 and the daily 200, right there, which was right at roughly, just say 171, okay? So because Google could not hold up that 171, it broke strongly through that 171. Now it's underneath the daily 20 and the daily 200, and that's where you see that big broad push because there's nothing there, right? It's given up essentially the last line of defense before it says, okay, we're gone down to the next support level, right? So now we're sitting in support again, okay? 165 to 170, which is interesting. I told my group, and I'm telling you all now, the way I trade personally is off of macro demand, macro areas of like support where I have a lot of, or resistance, right? So I'm kind of mad I didn't take the QQQ 533 puts. That was a macro. There was plenty of information. 1, 2, 3, 4, and then it pushed right up into there on Friday. Right? There was no reason. I took Apple puts because Apple was weak and, haven't been trusting this market lately. Okay. So Google, I like this idea that, maybe considering some calls off of here. You see, this is where I signaled Google last time in our community on calls when it was sitting right here. What was it doing? Break, pull back, pull back, pull back, pull back right into that support and start rotating. So I'm wondering if Google this time is going to hold, but this is a little bit different scenario because it's more of a trend break, in my opinion, right? We kind of broke this uptrend just a little bit here, right? And now this has got to turn into resistance, right? So I got to be a little bit more cautious on Google that, okay, it's in support. Let me trade calls on it. Yeah, we could, but I need to see how it reacts here because it's maybe just pushing right up into 171 again, only to rotate right back down. right? So that's what I'll be watching on Google. Is we do have some room from 165 to 171, 172. So I do like the idea of Google. So Google and Broadcom, I do like that they're holding their supports. The only thing about Google is underneath those key moving averages. All right. So that shows a little bit more weakness. Apple, um, I'm conflicted because I'm like, this could make a major move pretty soon, right? You're starting to see Apple curling up, which is getting very interesting here for calls, okay? You're starting to see it holding once, twice, 3 times, 4 times, 5 times, and it's starting to like having another failure to go lower, right? So I'm kind of watching this Apple. I was watching the price action on Friday of how it recovered, and you can see this is the trade I took from Friday, puts off of here, rotated all the way back down to fill the gap. But then guess what happened? Got bought back up pretty quickly. It didn't continue further. That tells me that, okay, that level is holding. Apple may want to revisit 206, right? It may want to revisit that 206. And if you can see there, if it starts rotating, right, still need Apple above 206, but just know, put on your alerts, if Apple gets above, just say 206.50, or maybe you want to say, hey, tell me when Apple's above 207. It's going to 210 plus, okay? Ideally 215, but let's be a little bit more, I guess, realistic until it does it. 210 to 212, and then ultimately it's trying to get back up to that 215 again, okay? So Apple does have a long way to go, but you can see the opportunity there for Apple, but it needs some help. It needs some news. It has a lot of fear in it right now, which is why I'm getting interested. All right, it's like, man, Apple's not doing anything. They're not really innovating. That's when they pop off with something. Right? So Apple, especially into their earnings season, we could pop on Apple. So I'm looking at maybe further out. I was kind of looking at Apple, maybe July 18th calls, just in case it pops. You see those already moved 50% on Friday. So maybe those 215 calls, July 18th. That'll give you at least, a couple weeks. If we do see Apple continue to hold it, you can day trade that, but also just in case something crazy happens, you want to hold maybe a runner and give it some time, a couple of weeks, and see if Apple has a pop. Then I would look at those maybe 210s or 215 calls for July 18th. All right, those are realistic targets that Apple could reach in that time frame. Okay. Still be cautious on the downside. Still want to have stop losses ready. So I would say stop losses below that 193 area. Below 193, that's when that failure comes in if the market gets super weak and it comes down like that. Right? Maybe it doesn't want to go yet. Okay. So, but get interested in Apple if you want to trade it above 207, going most likely to 214, 215 pretty quickly. All right, Amazon. Amazon looking like a double top here to me. Right? It was obviously one of the stronger stocks. It's very similar to Google, right? I'm kind of putting Amazon and Google next to each other. Their charts are looking very similar. As you can see there, kind of that uptrend, got really strong. Then kind of broke the trend, right? With a double top, break of trend, back underneath that 214 level was very key. You can see if I move over to the left, right there's 214, 215, and where did it move back down to? Right back down to 200, okay? Where is it going there? Has some gap fill back below, and if I'm on the daily, look at where it's sitting. That's kind of approaching pretty strong into that daily 20. So there's a difference between the reaction of the daily 20 or the moving averages that I'm showing you. You can see here how aggressive this candle was coming into it, right? It's pretty aggressive, right? Obviously, it's still holding above, right? Above that 210, 209, but it came in pretty aggressive. So if it breaks below that 208.78, okay, right below that area, we could probably see some more selling back down into 203 and 202. Okay, so ideally, I'm looking for pops and fades on Amazon because I've got a clear resistance I can trust. Right, I've got this one right here, and then I've got a double top up here with a break of structure. So I like this Amazon personally if we can get any type of like green pop on it, right, like that, and I start to see it rolling over, getting stuck. Right, I can have a risk to reward like that. And the trade idea would look something like this. Right. Look something like that, targeting that 202 or so, and maybe back down to that 206 and take profit, which would be right around here. Okay. So I like that setup because I can trust the resistance. Okay. Where my stop will also be. So we got Amazon, we got Apple, we got Google, NVIDIA. I'm going to move down because I'm like, yeah. MU earnings, that'll be interesting. Let's just take a look at the chart before we get out of here. Let's see if MU, what it's doing. So I've taught my community that this is, you see this monthly candle of MU, very, very strong. Not many sellers present, as you can see. No top wick that's very heavy. If I go into the weekly, really no top wick either. However, anytime I see a company moving strategic, like strength-wise into earnings, like shoot, from the last earnings, it went from $65 to $124. That is a 100% return, 103% to be exact. Okay, so in that case, I'm kind of expecting maybe a little of a pop, or maybe their guidance is off. Something, I don't know. Maybe they don't like the sentiment. Maybe they miss slightly. I'm not really trying to bet against this, but I'm just saying that typically that's what you see. Is you don't want to get too bullish on certain earnings, saying, man, this is super strong, they're going to kill their earnings, right? Because they could easily, be priced in and then pull back or whatnot to fill some of those gaps. So since it's so strong, not necessarily one to, I need to look up the, I'll put that in Leverage University, but I need to look up the actual percentage movement for earnings for them, and if it's worth it. IV is kind of low as well. That's not bad either. When the IV, I think that's low for earnings personally, anywhere between 70-80%. Usually earnings IV is over 100. So contracts aren't too elevated, but they still are. Okay, so yeah, may look at that towards the end of the week. We'll see, but probably better just to trade at post earnings. They may give us a gap. Looking through these others, Snowflake, UNH, still watching UNH, see what it's doing. HIMS, oh my goodness. Got to mention HIMS, just absolutely skyrocketed off this 52 to 55. It just, man, we were watching it, and it just slowly started trudging its way up. This is a beautiful example of how it looks when it consolidates into bullish consolidation. You kind of just start watching it try to curl, and if you can see where that daily 20 starts picking up, you see how it reclaimed it right there, right? If you can find, that's a lesson for anybody before we leave here. If you can put yourself on different charts and simply just go to the dailies and see where the daily 20 is. Okay, below it. Okay, still above it a little bit. Okay, AMD still got more room. Okay, a little bit more room. Microsoft, more room. Meta, okay, sitting right on it. So I'm interested, right? The closer it is to that, the more that there may be some volume off of that, right? Amazon, Google broke below it. So if it pops back up into it, 171, that could be a rejection point. Amazon sitting right on it. If it breaks below it, I know where it's going there, right? So kind of a hack for beginners, and even myself or anyone, I think anyone at any stage or typically uses something that just gives them a guide or a sentiment. So if that works for you and keeps it simple, great. Final last honorable mention, Coinbase, just absolutely skyrocket. I think it's going to have a pullback because Bitcoin, I know, a lot of folks are, what's going on with crypto? And Bitcoin's pulling back. Yeah, it is. Like, it was natural. It pulled back to 98,000. Right? But again, I still have daily 20, daily 200 on Bitcoin as well, and it's still sitting above it. So 98,000 is simply a pullback right now. No really big break, no double top, nothing crazy. So just watching Bitcoin here, this could be just a pullback to go higher. And with the fear in the market, there might be a buying opportunity. People might be buying up Bitcoin at 98 to 100,000, trying to get it to that 120, right? So I don't think Bitcoin, I know people were talking about it like, oh my gosh, like what the heck? Like, it's natural. It's wild, like some of the reactions that I see. Ethereum just, it's going to break one day. It's going to get moving to 5,000 one day, okay? But another great opportunity, in my opinion, on this pullback, sitting right in support on Ethereum. I've given my buy levels in the community on Ethereum. You can see right here on the crypto section. I've already given buy levels. I'll update them. I put Ethereum in altcoins because Bitcoin is just Bitcoin. Ethereum right here, buy zones 2300, 2000, 1700. There's a chart right there, and then my rationale why. So buy zones are already there. If you're in the community, if you're in Leverage University, you don't have to ask. They're already there. So just go look that up in the crypto section of, is this a good time to buy? Yeah, the buy zones are there. All right. Solana, great buy zone at 130, right? Sitting right in support again. 100 to 130, still a good buy zone for Solana if you're a Solana person. Daily moving averages kind of rolling off of them here, but rolling back into a key level of demand, which is sitting right at 125 to 130. Okay, so sitting right in a buy area. You can see I have these yellow lines marked. Those are intermediate buy areas, big buy zones. Back down here underneath 100 if it comes back down to like 80. Okay. MSTR pulling back. Where's that daily 20? Below it, approaching support at 350. This could be a double bottom here, and it could be just consolidating, right, to go back up. Okay, so I'll watch that. If it gets weak, maybe below 360, it can start making a move. But again, the further these moving averages away, that's a potential target for it to come back to, as you see. So if it stays underneath this daily 20 and starts, riding the wave underneath it, then it's trying to target back to that 306 and 300 level, which is right there at that daily 200. Okay. All right. I think I finished in an hour. Was that good? I think I finished in an hour. I can answer questions now. Him's looking very bullish after a big retrace. Yes, looking at Oxy, Exxon. Yeah, I think a lot of the questions sometimes when war goes on, like what are the best, typically oil. All right. Oil does very, very well. If you can see like Exxon and Chevron kind of making this big bullish move here. They've been lagging for a while back here at the beginning of June, and now they're starting to make a big move. So I do like Exxon and Chevron. I think Chevron maybe still has an entry point. Exxon is I need it to pull back a little bit. But Exxon moves a lot better than Chevron. You can see these gaps still above, so that's an opportunity. You see it curling underneath. Let me rechart this. I haven't charted this in a while. Let's keep it on a daily time frame. Let's look at where it reclaimed. Right there at that big, big reclaim of that daily 200. All right, you can see there. So that's a big level right there. The fact that Chevron reclaimed that. So I agree with you, Tanvir, that we have a lot of room as long as it remains above this 147 area, right, and then gets above 150. We could start getting some squeezing from the oil sector. Okay, so energy sector, oil, and it's got room back up to like 165. So this might be a top watch. My only concern is it's not my normal day trading. Like I've traded Chevron and Exxon before. You just got to put some time on it if you're doing options. If you're doing equity, right, that's perfectly fine, right? I think it's just getting started back up to 170 or 165 personally. Especially with this war going on, it's going to put pressure on oil prices and gas prices and whatnot. So maybe checking out August contracts, not bad there. So those are starting to move 165, a little bit further out of the money. September, end of the year, if you're looking at options, those aren't bad. And then let's look at closer dated, which would be July 18th. That 155, I think that could move. So it's okay. It's okay as far as I would need an entry. I like Chevron on the entry a little bit better because how big of a move Exxon has already made. It's approaching close to that top end 118 level right now. So a little bit close there for the risk to reward. So I would need it to pull back a little bit here into 110, and then I'll be interested potentially in that. So it'd be right in that area. Okay, pull back into there, 110, see if we can get that pullback, and then that'll be a beautiful, retest there to take it back up. So watch 110 to 112, on a pullback for Exxon, if you're looking for that and you like that setup. So, looks good. I'm going the daily really quick. Yeah, that daily 200 is sitting right there at that 110. So it pulls back in there if possible. If it just keeps going, I really don't want to chase, so I'll just go back to trade my normal stuff. But the target could be back to this gap fill at the highs, right? So it could just keep going back up to the highs like that, right? Cool. All right, folks. Whew. I feel like getting a little bit better, right? Less long-winded, less coddling, less beating around the bush, even though some of y'all may like that and you like slower paces, right? That is where the next level steps in. So if you're still on Leverage University, you want to understand this stuff, got to say it. So there's a link right above, 3-day free trial. Come in. We'd love to have you. Other than that, I will see y'all in the next Stock Summer Sunday and throughout the week. I appreciate you. Give me some love. Share this. The YouTube channel is growing. As you see, I've changed the name of it as well to Dr. Brian Trades. Just because there was so much trading content, I was like, I'm not even going to try to put my life coaching content on here. I'm just going to do another channel. Just going to do another channel because I'd be confused too if I come on here and start preaching and you're like, what the heck? I came on here for stocks, right? So we're separating those two entities, all right? Love y'all. Peace, love, and blessings to you. Have a great rest of your Sunday. We'll talk soon. Bye-bye.